Hi, I'm Pattu from FreeFinCal. If you are planning to purchase gold in the future, then here is a risk-free way to do it. So before we get to that, I think that we have to make a distinction between investing in gold and buying gold and or purchasing gold. So if you buy physical gold, that is, if you buy jewels, that's essentially for consumption, that you're going to wear that. Somebody in your family is going to wear that, and so that cannot be treated as an investment. Of course, it's an asset, but it's an asset that's being used. So unless there's a dire emergency, you're not going to think about selling it. So that's not part of your net worth per se. So if you purchase gold, essentially it's for a need. Now, if you want to invest in gold, that essentially means tracking the price of gold. For that, there need not be any actual gold involved. You can buy a gold ETF, or you can buy a sovereign gold bond or something like that, or a gold fund. But a ETF or a bond is probably the most efficient way to do it. But investing in gold means that the problem with investing in gold via a sovereign gold bond is that you must have a proper asset allocation. You must be able to rebalance, so which means that you must be able to buy and sell freely. So that's a problem with a sovereign gold bond. So an ETF would be better if you believe that 5% or 10% of your portfolio should have gold, and you can do that. You can take that exposure via gold ETFs. Of course, if you also want to trade in gold, for example, if you believe, for example, the US market is now crashing or has crashed, whatever, and you think that the gold price is going to move up, and then you can take a position in gold, and then after 6 months or 10 months when you've made a profit, you can sell it off. Again, for that, gold ETFs would work. So that's investing in gold as part of a portfolio, or you can trade in gold. That's fine. But for that kind of purpose, the sovereign gold bond, I don't think it's liquid enough for that purpose. However, let's consider, let's say you have a child at home and you're planning for their marriage, and don't say I won't plan for the marriage. We don't know. It's a good thing to plan, and you're going to accumulate gold or accumulate jewels for that. There's no. So let's say your child is let's say in your opinion 10 years away from marriage or 15 years away from marriage. There's quite a bit of time away. So there's no point buying the gold right now. Because, well, you can't, the styles will change, and maybe your child may not even want the gold after so many years have passed and so on. So even if you buy the gold, there's going to be the danger of, you're worried about so much gold in the house, you have to put it in a locker, and then you hear stories of lockers getting stolen, and then you're worried about that and so on. So instead of buying the gold, what you can do is just buy sovereign gold bonds. Or you can even buy an ETF, but the advantage with sovereign gold bonds, as per current rules, is that if you hold it for 8 years, it's tax-free. So if you have the money to buy sovereign gold bonds, buy them. I think the next series is just coming out. I think it's just available for sale just today, I think. So the series 5 is available for sale today. So you can buy the sovereign gold bonds and hold it for 8 years, and then it's tax-free. So of course it will give you the 2.5% interest. For that you have to pay tax, but forget about that. That's not your aim. That's just a little extra. Don't worry about that. Now the thing is, the advantage of buying a sovereign gold bond and holding it for 8 years, if your ultimate aim is to purchase gold in future, is first of all it's tax free. Second, you are basically tracking the price of 24 karat gold, right? Even if your investment in that gold bond, so the return on that investment is, let's say, minus 20%. After 8 years, the gold has fallen down and you've got minus 20%. It is still risk-free, because all you're doing is tracking the price of gold, and it's 24 karat gold. You will only be buying 22 karat jewelry. So at that time, if the price of gold has dipped that much, you would still be able to buy jewels, because the jewel price would have also dropped that much. Right? Of course, there will be some making charges and so on, but that 24 karat, 22 karat difference will take care of that to a large extent. So it's essentially risk-free. Of course, this is not an investment. This is just a way to accumulate money by tracking gold for a future purchase. And that is the reason I'm saying that sovereign gold bonds can be used for a future purchase in gold. Of course, The advantage of doing sovereign for choosing sovereign gold bonds is it's now currently tax free. As per current rules, if you hold it for 8 years, it's tax free. I think that's going to be because people are not buying it so much. It's going to be tax free incentive is going to be there if you hold it for 8 years. So if you think that the child is going to get married in 10 years, you can hold it for 8 years. In the last 2 years, and you just put the money in a bank, or you just buy it. Just buy the gold at that time if you think so. You can play it by the year at that time. Gold ETFs can also be used for this purpose. You can track the price of gold for a future purchase also using gold ETFs. Of course, the long-term capital gains will be taxed, but that's fine. It's just a little tax. Don't worry about too much about tax. So these are ways in which you can defer the purchase of gold using ETFs or sovereign gold bonds. The advantage with ETF is if you don't have much money to buy the bonds in a large amount, you can accumulate ETF gradually every month. So that's okay. Of course, the price you pay for that is a little bit tax at the end, but that's fine. It's with indexation and all that. It's quite reasonable. Don't worry too much about it. Anyway, it's going to be spent in one shot. So what's the problem? So that's the way to accumulate gold for a future purchase. There is one more way to do it. What Ashal Jowhary recommends in Asana Ideas of Wealth. He says essentially every month track the price of 1 gram of gold and put that in a liquid fund and keep accumulating. That's also a way. Of course, you need to pay a little tax, but that's okay. That's also a way to do it. It's almost risk free. It's not as risk free as this, but it's almost risk free. If you because you're not buying all the 1 gram worth for the current rate, but if you put all of that in an ETF or a sovereign gold bond, the full amount will be fluctuating according to the gold price. So it's almost risk free, but it's fantastic. There is one more way to do it. If you say that, look, I'm not interested in just tracking the price of gold. I want a little bit more return. I mean, it's okay if it has got risk, then you invest in a balanced fund, in an aggressive hybrid fund. Then you might get some return if you manage your portfolio well. You might be able to beat the gold price returns over that period, and you might be able to accumulate more. The biggest advantage with not buying physical gold intended for a future use and essentially investing it in terms of money, whether it is put in an equity mutual fund or a liquid or a debt mutual fund or a ETF or a sovereign gold bond, the essential advantage is you don't know what your requirements or your child's requirements will be 10 years away, 15 years away. You might say, I don't need so much gold for my marriage. The child will say that. They may just let me use that money and go for an extended honeymoon, or let me just go on an exotic holiday. I don't want to buy gold. I can buy gold whenever I want with my money. The child could say that to you. That's possible. Or you may need money for something after so many years. You can take a portion of it away. So that's why it's always better to have money, and so that you have that liquidity and you have that flexibility to play around with it. So that's what I wanted to say in this video. Sovereign gold bonds offer a nice way to track the price of gold for a future purchase free of tax as per current rules. And yeah, my beard has come out because I got glasses in a couple of days. I want to look good. So catch you in another video. Bye bye.